The first thing we need to know is what is bond. Bond is a long-term fixed income security in which the issuer has agreed to pay income payments for a specified period and to repay the principal at maturity to the bondholder. Bond is also known as a security because it can be publicly traded in the open market. Bonds are considered safer investment than stocks, since we know the fixed income that we will receive for a long time. This does not mean that there are no risks investing in bonds, but the risk varies in the type of bond you purchase. Next is who can buy bonds in Malaysia from the bond market. The eligible issuers include public listed issuer, licensed bank, Charja Mas Berhad, as well as the public companies whose shares are not listed but irrevocably and unconditionally guaranteed by the first three aforementioned entities. Dana Jamin Nasional Berhad are credit guarantee and investment facility. Bond issuer have an option to issue bond under the conventional or Islamic principle. Retail bonds and sukuk may be issued by certain eligible issuer as mentioned above and traded either in the exchange, Bursa Malaysia, or over-the-counter OTC via appointed banks. This allow issuer to have access to a larger pool of investor and facilitate greater participation in the bond and sukuk market.
Now, I will explain about the types of bond. There are many types of bond in Malaysia. There are two categories that we use, which is the government bond and the corporate bond. Government bond is issued by the government to fund the national expenditure. Corporate bond is issued by the corporations and other eligible companies to fund the business operation and other special projects. There are two types of bond that usually used in Malaysia, which is the Malaysian Government Security, MGS, and the Government Investment Issues, GII. MGS is the conventional bonds, meanwhile GII is a government sukuk based on Islamic principle. MGS and GII are a fixed rate. The coupon-bearing bonds and profit-bearing sukuk with a bullet repayment of principal upon maturity. The coupon and profit payment usually are made semi-annually. Besides, MGS and GII were issued using a competitive auction on behalf of government by the Bank Negara Malaysia. The tenures of both MGS and GII is vary from 3 years to 30 years, but it will become a benchmark for government bond and sukuk yield curve for 3 years, 5 years, 7 years, and 10 years. Meanwhile, for the corporate bonds, there are two categories, which is the long-term bond and the perpetual bond. The long-term bond is known as medium-term notes in Malaysia. It has a maturity duration for more than 1 year, and it also could be issued by both conventional and Islamic principles, and by direct placement or tender. Besides, they also have sukuk, which is an Islamic bond that has a structure that they can yield returns just like conventional bond, but without any prohibited elements like riba and interest, which follow the Islamic principle. Then, the perpetual bonds is the issuer have to pay the interest forever, and the principal will never be redeemed because the structure is more to treated as equity rather than as a debt. This bond has no maturity date, but even it has no fixed maturity date, the perpetual still mature.
Now, let's get to know about the investment bonds features. As I make some research, I acknowledge bonds have a number of characteristics that investors should consider. The popularity of this debt product can be attributed to some enhanced characteristics of bonds, and I came up with 6 important features. Firstly, face value or par values refers to the bonds prices of a single unit of company bonds. In other words, it can also be called as principal or nominal. Therefore, the issuer are required by the law to repay this value to the investor after certain periods of time. Assuming an investor decided to purchase a corporate bonds with a face value of 1,090, following the maturity of the tenure, corporation is required to pay the investor 1,090 plus interest. It is important to note that the face value of the bond differs from its market value, which is influenced by the market corporation. Thirdly, coupon dates is mainly about the bond's issuer interest payment dates, and it is a coupon payments that are typically made on an annual or semi-annual basis. Fourthly, Maturity dates or tenures of bonds refer to the amount of the time it takes to mature. A bond maturing in 1 year is much more predictable and thus less risky. The one maturing in 20 years, however, to buy and sell a bond before its maturity dates on the open market. Therefore, changes the amount of money that the issuer will pay you as a bondholder based on the bond's current market value. Fifth, credit quality can be referred to the creditor's agreements on the long-term performance of a company asset is defined by the level of investor confidence in an organization's bonds. Therefore, credit rating agency classified bonds based on the likelihoods of a company defaulting on the debt payments. In other words, investment grade securities have lower yields due to the consistent market risk elements, whereas the non-investment grade securities have a high returns at high risk. Finally, tradable bonds can be purchased and resold on the secondary markets, and the ownership can shift among several investors in a short period of time. However, when market price exceeds nominal values, these creditors frequently sell their bonds to other entities because they can secure bonds with a high yield and appropriate credit rating. Now, we are going to see the advantages versus disadvantages. Bond investment benefit customer in a variety of ways. Because of the consistency of interest and principal returns, bonds have proven to be the solid investment alternative for consumers who are wary of market risk. We are going to look on the advantages perspective investment. Firstly, stability. In a comparison to other investment options, long-term financial instruments proven guarantees returns. Secondly, indentures to ensure the borrowers to repay the principal amount to the creditors on time. Contract contains information such as the par value, coupons rates, durations, and credit rating. Thirdly, portfolio diversifications of bonds, for example, are widely used by investors to diversify their portfolios because they provide higher risk-adjusted returns on investment versus disadvantages perspective in investment. Despite being a low-risk investment option, bonds have specific limitations that investors should be aware of. Firstly, inflation's influence. Bonds are subjected to inflation risk when the current rates of inflation exceed the coupon rate offered by the issuer. Secondly, limited liquidities of bonds. While tradable, are frequently long-term investment in withdrawal limits. Finally, lower returns in bonds. Issuers typically offer lowest coupon rates than stock returns.
Then, for the current issue regarding investment in bond or sukuk in Malaysia, is we can see that during the pandemic of variant Omicron become more transmissible, our economic activities are facing many challenges, but after the vaccination rate increased nationwide, it gives a chance for our economic activities to grow because the economy to reopen again. Besides, regarding the sukuk bonds, Malaysia has led in sustainable and responsible investing (SRI) sukuk in the 6 ASEAN countries, with $3.9 billion of issuance value, or 56% of the total ASEAN sustainable and responsible investment sukuk issuance in November 2021. So, I think that's all from our group, and thank you for lending your ears.